and started telling everybody, hey, have you heard, Pierpont Morgan Bank is running out of money. Yeah, I just withdrew the money. You better do so as well. And then that malicious rumor is kind of like FUD on the internet, and it just spreads everywhere. And basically, by the time 3:00 in the afternoon, there's long queues outside the bank trying to get that money back. That's a run on confidence. Right now, it is not technically a run on confidence. It's basically the bank runs we're having right now shouldn't even be called bank runs. They're more for a very logical and technical reason. So, for example, like what you have is I've got friends around me who do this all the time. So basically, if you, for example, park your money, like if you have $2 million or $1 million in the bank, and you're saying, oh, they used to put it into like a 6-month savers account. Why is that? Because because you get better returns than if you put it into a flexi account. And then of course, if you have the discipline to put it into a 2-year or 3-year account, you say, I'm not going to need that $2 million for 3 years. Some people do that. And they put it in for 3 years. And usually the longer you lock it in, the higher your yield. And if you pull it out early, you get punished, right? Anyone who's over 18 knows this. If you pull out too early, you get punished by the woman. But the thing is, same with your bank deposits. And but now, because of what the Fed has done, it's so, shall I say, extreme. So what happens is basically we haven't had interest rates at 0% for like forever. Like this is the first time in US, well, probably in like 100 years, we've had 0% interest rate. And US had it for 14 years, right? Right after 2009 GFC crash. And that gotten everyone so used to zero interest rates. And then it hikes 5%, like literally 5%. We just hiked up to 5% in the last, in the last 12 months, literally, starting from March last year to March this year. Yesterday makes it 5%, from 0 to 5%. Imagine that. It's like, when you do that, basically the technical reason why people are withdrawing their money is not because of bad rumors. It's because of this. Basically, people go, the people around me who are like, oh, I can put a lazy $2 million in the bank and put it on 3 years. Now they're saying, no, I want to put that on 6 months, because 6-month interest rate is higher than 3 years. And then the bank's only offering them like 2.1%, 1.8%. They're like, I'm so sick of my bank, because hey, look at the look at the U.S. Treasury. U.S. Treasury bonds right now are paying off 5.2%, 5.3% if you park it in there for 6 months. Why don't I take my $2 million out of the bank and park it in U.S. Treasury bonds for 6 months, and I'll get 5% return rather than this 1.8, 2.1% return. And a lot of people start doing that. So if people start doing that, it's not a bank run. It's not a crash of confidence on the bank. But when they start withdrawing that money, basically the bank's like, guys, we have all your money, but it's all invested in like long-term bonds, which are underwater by like 40% right now. We can't sell that and give you that 100% of your money back. And we also have it in other loans, which are healthy. It's not like a 2009 situation, but nobody expects a bank to be able to give you all of your money, like all of your money in one day or 1 week or 1 month. It's just not possible. Banks are just not designed that way. They're designed to put that money away into a loan, into a mortgage somewhere, to help people buy houses, build houses. This situation, this is not really the bank's fault, although Silicon Valley Bank, First Republic Bank are less well managed than other banks. However, if you look across like the balance sheet of almost every major bank, they've all done this. They've all got the same problem, just to a lesser extent. And it's not really their fault, because nobody imagined after 40 years that we've never seen rates go up this high, this quickly, from zero, and then it suddenly happens. So nobody's prepared for it. If I have to give an analogy, I would say, imagine for the last 14 years, you've been a couch potato, and then suddenly you don't expect your gym teacher from school, who's now 67 years old. You thought the guy's dead or retired already. He busts through the door and he says, "All right, Tubby, get off your effing, ass, and we're gonna go for hill runs." You go, "What? It's gonna be like gym school again." You go, "I didn't do that since for the last 40 years. I was 12 back then." And he says, "Get off!" He starts whipping you, making you do hill runs, and now you're like carrying, a huge gut. You're carrying, a man boobs, and you have to do these hill runs. Of course, and they still expect you to do it the same way they did back in the 70s, which was they hike and they hike and they hike until they kill inflation. And same thing here. You're hiking up those, you're running up those hills, and suddenly you find yourself having a heart attack. And it's not your fault, and it's not the gym teacher's fault, but somebody's dying here. And then they're asking the US government to come in and say, who's going to pay the medical bill on this guy to resuscitate him? It's kind of like that. It's a situation that the banks weren't prepared for.
Yeah, I think that's a good analogy. So it's basically a problem with fractional reserve banking, that the system is not designed for this kind of stress. And the funny thing is that the Fed created the stress by drawing consumers and businesses out of their deposit accounts into treasuries, like what you were saying with, getting a better rate. And so they should have seen this coming. I mean, it's a fascinating failure, I think, of regulators. And another massive failure of regulators also is, if you read Brian Armstrong's tweet today about how SEC just served them with papers, and when Brian Armstrong asked, what's the problem? Which of our digital assets do you consider to be securities? There was no response. And also, when they went public, when Coinbase went public a couple of years ago, the SEC reviewed everything and approved all of their filings. Because when a company goes public, this is one of the things I tell my followers. This is one of the reasons why I like to use Coinbase, because all of their business is regulated, audited, standardized and that's very rare in the crypto world. I mean, we all see right now that all of these other platforms and exchanges, SEC approved their business and now is coming back later and saying, it's the typical regulation by enforcement. So it seems like there's a couple of different blunders happening right now by regulators. One is their failure to see the banking crisis coming. It was coming from a mile away. And the other is their failure to provide reasonable guidelines and infrastructure for crypto, and then coming back a couple of years later and saying, here we're gonna charge you with this lawsuit. It's going to cost you $10 million in attorney's fees to defend. And by the way, we're not even telling you what you're defending against. We're not even telling you what the problem is. It's just this ambiguous language. So there's all these regulatory failures right now. It's very interesting.
Yes. So basically, the banks are. They did a survey. Well, they did a test. They looked across the balance sheets of all the banks in the US. They found at least 186 other banks who are in a similar sort of trouble. And I was just saying to my Discord that one of them was actually a lending institution. You can call it a bank, but it's not. That is owned by Warren Buffett. And I said to my Discord, hey, this is a good opportunity to get in. The stock symbol is called Ally, like the girl's name. ALLY. It's basically a car loan lending institution. They're in the same boat. They've been crashing, and Warren Buffett owns something like 10% of it. Yeah. So hang on. If you guys wanna check it out on a chart somewhere, whilst you're on your phone or on your laptop, then you can see what I'm talking about.
Yeah, so there's all these banks and the problem goes deeper. And I think the funniest statement about this is that Operation Choke Point, which is the operation to try to kill crypto, is actually killing the banking system and pumping crypto. Right now we're seeing, there are many people now who were sort of sitting on the fence about Bitcoin and not really sure what they thought about it, and now they're like, oh, well, actually my savings account might not be safe. And, the FDIC is not telling me if I'm going to get bailed out if I have over 250K. Bitcoin looks pretty good. So Operation Choke Point, which was designed to kill crypto, is actually making crypto more popular. You couldn't make this stuff up.
Okay. I have a big problem here. I wanna ask you this as well, Brian, because there's a lot of people saying that the recent big run up in crypto, in Bitcoin, is due to this banking collapse. So people are worried. People are saying, "Oh, look at gold. Gold is soaring. Crypto is soaring because people are so afraid right now of bank collapses." So rich people who have over 250,000, which are not insured in a bank, are withdrawing their money and they're buying gold instead. They're buying Bitcoin instead. What do you think of that narrative?
Well, I think it's a multi-pronged occurrence right now. I think that there are a number of reasons why people are looking at crypto and Bitcoin more seriously. And for the sake of this conversation, let's talk about Bitcoin as a store of value, as the crypto that most people will see first when they come into the space. We're talking about new users, new money. And I think it's multi-pronged. You know, people have been watching Satoshi Nakamoto for 10 years, and, or not him personally, but his invention, and kind of, you know, trying to figure out what they think about it. And now we're literally in the situation that Satoshi envisioned. Inflation out of control and banking failures, right? Not your keys, not your coins. We're literally living it out. So I do think that this is an endorsement for Bitcoin. I mean, how could it not be, right? I mean, you can look at me and you, Pablo. You know, we talk a lot about, hey, what should we invest in? What are you putting your money in? Are you buying real estate? Are you buying stocks? What are you doing? And I am increasing my exposure to Bitcoin personally, because it's like, what else are you going to buy? You know, the housing market in the United States is very delicate right now, and you know, for obvious reasons with interest rates. So,
No, I hear what you're saying, Brian. Those were my thoughts to begin with, and I questioned myself because in some accounts, like say if you just even have $1 million in a bank account, you're like, oh crap, they only insure 250,000. I'm gonna have to find 4 bank accounts for this. And if you have $10 million in a bank account, you're gonna be like, oh crap, I'm gonna have to find 40 bank accounts to park that $10 million, because think about it, they only insure you up to $250,000 per account, right? So therefore, you're gonna have to find 4 accounts, $250,000 each. That's 1 million. You have 10 million. That's 4 times 10. That's 40 accounts you need just to park $10 million, right? What if you have 50 mil, 100 mil? Some businesses, some people have that problem. I believe a lot of people, even just average Joes on the street, have over 250,000 in a bank account. They could be using that to pay off a mortgage or whatever. So my initial reaction was like yours. What do I buy? Do I have to withdraw money out of some bank accounts and put it into create new bank accounts, or put it into other things? Because I think there are 186 other banks which have this problem, and they're already they're still facing this problem that Silicon Valley Bank has, which could still happen. So I would love to put it into Bitcoin. The problem is this. I remember very clearly, I'm trying to debate myself as well. Has Bitcoin finally matured? Has it finally become, this new great instrument where you could just basically park your money in there and it behave like gold. In a banking crisis, this is what Bitcoin is invented for. You can just park your money in there and it behave like gold. But the problem is it doesn't behave that way. If we all remember back to, I think it was, I'll find it on a chart to be precise. If we can all open up like a USDC chart, USD. Okay, so for example, if we look at a USD chart, the crash. Remember how Silicon Valley Bank crashed on Friday and Saturday last week, which is 10th and 11th of March, right? Silicon Valley Bank crashed, and there was $3.3 billion out of $45 billion from Circle or USDC that is parked within Circle, within Silicon Valley Bank. So what happened is that day USDC depegged from 1 to US dollar. It depegged to 88 cents at worst, and went to like 80 cents on some exchanges. Like I'm looking at Gemini, and it went to 82 cents. Okay, on that day, you know what happened? On that day, if we look at gold price, if you guys could do this exercise at home, on that day, gold price started going up. In fact, gold price started going up 3 days before. 3 days before this whole blow up, and basically, yeah. So we can see the gold price bottomed around the 7th or the 8th and started going up just as this crisis was happening. Bitcoin didn't really bottom till like the 10th or the 11th. That was okay. I'll pull up a Bitcoin chart to be 100%, so we can 100% see it. You guys can do this exercise at home as well. If you look at Bitcoin, it actually crashed on the day. See, on the 10th and the 11th, when USDC was crashing, I remember Bitcoin was also making new lows. It was actually like going to 19.5K, 19.8K. It was making new lows. Unlike gold going into that crisis, which started like on I think Thursday, Friday already, Silicon Valley Bank was in trouble. On Thursday and Friday, gold price was already going up. So what I'm trying to say is this: what made Bitcoin go down instead of up when Silicon Valley Bank was crashing? It was for a very particular reason. It was because Silicon Valley Bank actually holds $3.3 billion, or like 8.8% of all of Circle's money. So people were panicking, thinking, all right, if Circle loses peg, then that means a lot of people are going to run away from stable coins, and then who's got money to buy Bitcoin? So that's why there was a panic. And in fact, okay, let's look at, if you're on your chart, look at this big drop on the 9th of March. On the 9th of March, Bitcoin went from open of 21.7K to a low of 20K exactly, and then dropped to 19.5 the next day. So gold price was actually going up on the 9th of March. And USDC, when did USDC start crashing? USDC again. We just hang on. So 9th of March, Thursday. Yeah. So I guess again, you could. USDC was fine on 9th of March, but on the Friday and on the Saturday, on the 10th and the 11th, USDC crashed, and Bitcoin was still crashing. Bitcoin was still spending time at the bottom, which is below 20K. Yeah, but below 20K when all this was happening. What it means is basically, if there's a bank crash, then people are going to panic and think, does that mean USDC is going to be affected? Does that mean BUSD is going to affect it? Does that mean USDT is going to be affected? Because that's what we just saw. We know that USDC had its money in Silicon Valley Bank, and Silicon Valley was crashing. Therefore, people were panicking, and therefore people were dumping all cryptos and dumping Bitcoin to an extent as well. If, say in 6 months' time, say in a year's time, we have another big bank run or big bank crash or financial crash, I think that could easily happen. What you're going to see is, say, 20 banks or 200 banks are in trouble simultaneously, and they're in trouble until the Fed comes in to save them. Of course, the Fed will come in and say, we'll print money forever and save these banks. But whilst that is happening, rumors are going to start circulating, or even facts are going to start circulating online, which says, of the 200 banks that are in trouble, Signature Bank, this bank, and Bank A, Bank B, and Bank C, they all hold money from USDC, and some of them might even hold money from Tether, and this one definitely holds money from BUSD. Guess what? It's going to be a repeat of March 10th again. Bitcoin's going to tank again. I'm not sure how much lower it's going to go, But you could have a situation where USDC becomes unpegged again easily because USDC tells us which banks it parks its money in. USDC Circle, which I thought is actually probably the safest of the three major stablecoins, actually holds like 80%, 75% of its money, of your money, backed one-to-one in US Treasuries, but short term. So you don't really worry much about that. Unless US government doesn't lift the debt ceiling limit, which could happen. It's like a 1 to 3% probability, but I think the Republicans are really determined to punish the Democrats this time, and they may not lift. Anyways, that's a small probability. But what is a big probability is that you're going to get more banks crashing. If more banks crash, and then suddenly we see this bank crashing, and we say, oh my God, it's on the list of the banks where USDC or Circle actually parks its money. It's another Silicon Valley Bank situation again. Like 5% of Tether of Circle is now unbacked. Oh my God. So Tether goes to 0.95, and in a panic, it goes to lower than even where it deserves to be, which is like 0.91 or 0.88, something crazy like that again, and Bitcoin dumps on a day like that. On a day like that, you know what happens to gold? Gold actually goes, oh crap, banks are failing, let's buy some gold. The more Silicon Valley Bank collapses, the more Signature Bank collapses, the more gold goes up. Bitcoin, unfortunately, has shown that it does the opposite. On that same day, where does BUSD, this Binance, stablecoin, where do they back their reserves? As far as I know, they're parked with Paxos Bank in New York, PAXO. I haven't looked into it. I think they're okay. They're not super safe, but they're okay. But what if this Paxos institution runs into trouble on the same day? And let me ask all of you guys this question. See if you can answer this question. In which bank or in which Treasury bond is Tether parked? That's the largest fucking stablecoin out there by far. Where does Tether park their money? Maybe Tether's got money in Signature Bank. Maybe Tether's got money in Silicon Valley Bank. Maybe Tether's got 3% of his money in Silicon Valley Bank. We don't even know. The thing is, I've been saying for a while to my Discord that USDC actually got punished for being honest. Like USDC told people, hey guys, we're going to be super transparent with you. That's why you should trust us. And we're telling you we've parked 75% of the money in Treasury bonds, and then the other 25% are in banks such as Signature Bank, Silicon Valley Bank, and whatever. Tether doesn't even tell you where they're parking their money. Tether does not even tell you. So you know what happens with Tether? If 200 banks suddenly are in trouble in the US, which they are already right now, then my assumption is USDC is not going to be 100% backed. And Tether is even going to be less than Circle. Just because they don't tell us doesn't mean they're not in trouble. Tether could be, because they're European. All their guys are Italian, right? So you look at the CTO, Paolo, you look at their founders, they're all like Italian or Italian Americans. They're based out of Malta right now, on a regulation arb. So what that means is Tether could be parked on a safe conservative assumption in one of the Switzerland banks. Tether could have its money in UBS or in Credit Suisse, like 3%, 10% of its money. That's just a safe conservative assumption. 1%. So if that happens on a global financial fucking crisis, what do you think is going to happen? The safe assumption for a guy who's got millions in there is USDC is no longer 100% backed. USDT is no longer 100% backed. BUSD, I'd have to look into which bank it parks its money at. From memory, it's Paxos, PAXO. They're in New York somewhere. So none of these stablecoins are safe on a day like this. And we just saw that when USDC presumably lost 8.8% of its deposit, and it's 8.8% unbanked. On a day like that, we just saw that Bitcoin kept on going down. Not much, but it kept on going down. It was already down at 20K, but actually didn't bounce. It's hard to tell because on the day when Bitcoin crashed from 21.5 to 20K, USDC wasn't in trouble. But I think Silicon Valley Bank was already in trouble on that Thursday. I'd have to go back and look at it carefully. And unfortunately, on that day, gold shot up easily and Bitcoin didn't. So that's what I'm worried about, Brian. Like you and I have some real money. If you choose to hypothetical question, if you choose to park, say, like, I know you've got houses, but let's say you have say $3 million in cash right now, which you're waiting for a chance to buy the bottom, buy the dip when everything crashes. Of that 3 mil, you'd have to have 12 bank accounts. Would you even park 1.5 mil of that, half of that in Bitcoin, knowing what I just told you? Knowing that Bitcoin on Thursday, 9th of March, crashed from 21.5 to 20K. This was I think that was the day when Silicon Valley Bank was first having its problem. I can't be sure that this was due to I'd have to go back and check when USDC said they're in trouble. I'd have to check when Circle USDC said, sorry guys, we have like at least $3.3 billion parked inside SVB, Silicon Valley Bank. I can't be sure if that started on Friday or that started on Thursday. So at least on Friday, it actually bottomed, but it actually kept on going down whilst all this shit was happening. I remember this clearly. I was chatting to my Discord when this was happening. I can't be sure that Bitcoin held up during this banking run. I mean, just ask yourselves if during a major, I think this is only like a pre-show. This is only the undercards. When you have the main title fight in like 3 to 6 months from now, when you have USDC unpegged, you have USDT unpegged, you have BUSD unpegged, all on the same day, do you then think Bitcoin's not going to crash and actually hold up its value and actually go up like gold? Because everyone's going to be saying, oh my God, won't it coming to an end? Hold fucking gold. I should have bought gold 3 months ago, like Pablo said. Or do you think people are going to be like, USDC crashing, USDT crashing, BUSD crashing? I think Bitcoin's going to moon, buddy. I don't know. My conclusion is probably, I think Bitcoin's going to go down on a day like that. I don't think it's going to hold its value. So in 3 months, okay, back to you.
Okay, well, does anybody know what the first stablecoin was? 2014, actually invented by Charles Hoskinson, the founder of Cardano. Does anybody know? I'll tell you what, you don't know. The reason you don't know is because it doesn't matter anymore, because we use different stablecoins now. It was called BitUSD. Have you ever heard of BitUSD? No. So my point is that, does it really matter if we have some stablecoins fail right now? Bitcoin survives, right? I mean, I love the saying, tick-tock, next block. Clock tick-tock, the clock moves forward, Bitcoin creates a new block, Bitcoin doesn't care, it keeps marching forward. Stablecoins come, stablecoins go. Exchanges come, exchanges go. So I think it probably depends on your timeline. You might see some crazy volatility as, some of these stablecoins get wiped out and come and go. It depends on how long-term you're looking, right? I mean, if the first stablecoin doesn't even exist anymore, that should tell us something. The other thing, Pablo, is that Bitcoin has went up 40% in the last couple of weeks. So are the things that you're talking about daily moves, or are they larger moves? Because if Bitcoin gets hit for 3 days when a stablecoin collapses, or even 3 weeks, or even a month, do I really care? The other thing I would say, playing devil's advocate about Bitcoin versus gold, which, by the way, I love to debate Bitcoin versus gold. I think it's the most fun thing and the most relevant thing to debate, because that's really what Bitcoin is supposed to be, right? It's digital gold. And if it can't be digital gold, then we're wasting our time. We really shouldn't even be investing in Bitcoin. We should be just investing in gold and stocks and, whatever else we want for our risk tolerance. So does it stand up as digital gold? And, to play devil's advocate and defend Bitcoin here, I'm sounding like I'm a Bitcoin maximalist, which I kind of am if you really boil down to the root of it. There are a lot of disadvantages about gold that just are not being seen right now in this crisis. This crisis is not revealing them. But can you self-custody your gold? No, you can't. I mean, sure, you can buy a few gold bars, but who's really going to do that? Is it divisible in the amount that you're going to invest? Are you really going to put, $1 million worth of gold bars under your bed? No, you're probably not. The other thing about it is, can you send it to someone easily? Can you travel with it? So it's there's other aspects of the gold versus Bitcoin argument that this particular financial crisis is not shining a flashlight on. It's not illuminating those aspects. You also are trusting these big financial institutions to hold your gold, just like we do with Bitcoin. If you're buying a gold ETF, that's vulnerable to the banking system. Did you see that thing where there was supposed to be nickel and copper in bags in a warehouse, and they went in and there were actually rocks? You probably know more about this than me, Pablo, but I mean, that's where you have
Brian. I'll answer.
Really own gold? Do you really own gold?
I'll answer one question at a time. So basically, so you are saying that on a day when banks crash, which means Circle, Tether, and BUSD are no longer one-to-one backed, and they all three, or two out of the three, or at least one out of three, unpegs on the day, like we just saw last weekend. And when that day comes, you do acknowledge that Bitcoin could have some very strong short-term volatility. So imagine this: what just happened last weekend with Silicon Valley Bank? That kind of action on Bitcoin, but on a day when 10 times more bank crashes, when it's like a Lehman Brothers moment. I believe that Silicon Valley Bank was quite small compared to Lehman Brothers, and in terms of importance. On a day when a Lehman Brothers type of crash comes, which I think is quite possible in the next 3, 6 to 9 months, I think we're being set up for that kind of either financial crash or recession. On a day like that, do you think Bitcoin holds up like the way gold did last weekend? Because last weekend, gold actually made 3 full bars going up, but Bitcoin from Thursday, Friday, Saturday actually kind of went down and tested 19.5K. Do you believe the volatility could be even larger or much larger than that on a day when 1, 2, or all 3 of the stable coins depeg on the bank?
I agree with you about that. I mean, the stable coins depegging is attacking crypto at the very heart.
Okay. Then let me just answer your first question, because I do believe you raised some interesting questions about gold versus Bitcoin. So on that first, for a lot of the guys in front of listening to this podcast, or in front of the camera right now, why are you saving $300,000, $400,000, or $100,000 right now for? It's because you listen to someone like Pablo, who said, guys, work double jobs, work 2 jobs, save up, because a mega crash is possibly coming when a recession comes. And when that recession comes, Bitcoin could go to 12K again. I still think Bitcoin could go to 12K or below if a recession comes again, especially if we get a bad one. And you save all that money, you can't put it into a bank because, let's say hypothetically, you don't trust the bank, and you say, I'll put it into Bitcoin because Bitcoin is safe. You put into Bitcoin at, say, 25K. And then on a day when the real crash comes, and you're like, whoa, now's the time, and it lasts for like 3 days or a week before the Fed even comes out to rescue. You see stocks just going down 3%, 5% every day for an entire week. And if that scenario happened, and banks crashing, you're going to see 3 stable coins, or at least 2 of them, unpeg. And then you're going to see Bitcoin probably go down 20, 30% on that day, maybe from 35K, wherever it is, in 3 months, 6 months time. It might get to 35K, and it goes down to 22K on that day. On that day, if you're holding for the long term, then yeah, you're fine. I'm pretty sure you'll be fine. And in 10 years' time, 5 years' time, Bitcoin's probably going to be worth a lot more. I can't guarantee you that. Probably, but the odds are good. But on that day when you need your money the most to say, hey, this is a time to go all in. I wanna. Pablo was right about this all along. It's just that it's taken longer to play out. I'm gonna take that $400,000 out to buy houses, like Pablo's been saying, buy property to begin with, because properties has crashed, banks have crashed, properties crashed. And then I'm gonna buy some really quality stocks, and then I'm gonna buy some crypto as well, and have a healthy portfolio. And then you say, oh, I've stored all $400,000, $500,000, $600,000 in Bitcoin, and it just went from 35K down to 21K, and looks like it's headed down more in the last 3 or 4 days, whilst all these banks are crashing. So what I'm saying is, if your objective is to say, take a guy like yourself, Brian, and say, hey, I've got $3 million, lazy 3 mil lying around. I just want to park half of that in Bitcoin because I don't trust the banks. Sure, that's fine if that's a 5-year hold for you, because if you bought it at 25K, 21K, it doesn't matter, because in 5 years' time, it's going to be worth a lot more. I think, can't guarantee you that. But if your objective is to say, I'm going to be buying houses, buying stocks, and buying crypto and going all in that week, it's kind of like the COVID crash of March 14th, 2020. If you guys look at it on a chart, basically everything skydived on that day, and it's been diving for a week. And then the Fed basically came in and rescued everybody on that day. So if you just look at that chart, if everyone can open up a chart somewhere, right? On that day, the SP 500 went from 3,400 down to 2,200 in matter of like 2 weeks, 3 weeks, right? When COVID first hit. On that day, you want to say, I want to take my money out, and I want to just go all in on stocks, on gold, and then I'm going to try to on stocks, on houses, and some in crypto as well. I'm going to try to time the bottom of the crypto, because that's when Ethereum will probably go to something like $800 or less. Guess what? On that day, Bitcoin is probably going down. In that week, in that month, crypto is probably going down. Bitcoin's probably going down 20, 30%. 50%. We just saw how it behaved in March 2020 during COVID crash. And people who are long-term believers in Bitcoin, including myself, I'm a long-term believer as well, say that, okay, Bitcoin has not matured yet to be like gold. One day it will be, but hasn't matured this time during the Silicon Valley Bank crash. And we just saw the answer. Still not yet. It's still not there yet. On that day, it depends on, I'll make it absolutely clear. It depends on what you're trying to do. If, like Brian, who's got a few $1 million and you don't trust the banks, you want to put like 10% of that, 20% of that, 50% of that in Bitcoin, and you want to hold it long term, like say 5 years, it probably will work. But if your objective is to because you've listened to Pablo and you think a big mega crash is coming where SP 500 and Nasdaq could go down another 30 to 40% from here, and you think that Bitcoin can revisit 12K again or even lower in a mega crash, and all three stablecoins can depeg on that day, and housing prices can go down 10 to 20% in 3 months to 6 months, and people are selling like something like 2009, a repeat. I'm not saying in the US, but in some countries, house prices can go down that much. If you're waiting for that day, then you want to put it somewhere where it doesn't go crash like Bitcoin would in a week, in a month when that happens, and you take it out of gold or you take it out of a bank account, and then you go all in, buy a house, buy some quality stocks that day, and buy some Bitcoin and buy some Ethereum that day. If that's your objective, then I'm not sure holding Bitcoin would save you in a week like that. So it depends on long term or short term.
Yeah, completely agree. It depends on how much liquidity you have for other opportunities and what you think Bitcoin is going to do. And this actually brings up another interesting point that I've been wanting to ask you what your thoughts are, Pablo. But I wonder which assets in this inflationary environment, which assets are going to do well, even if there's a big sale, even if there's a real estate sale, even if there's a stock sale. Let's just picture ourselves, we're at the bottom. We've reached the bottom. Bitcoin's 12K, stocks are down, houses are down. Which ones are going to bounce the fastest and the highest? And I feel like Bitcoin will do very well against those other assets. I really think that, one reason for me is that the market cap, the entire crypto market cap, is still hovering around only $1 trillion. You cannot overemphasize how important this point is. $1 trillion is still tiny. I mean, the market cap of gold is something like $10 trillion, right? So we are like teeing up. You know, when you're playing golf and you're teeing up for that perfect shot, we're like teeing up for a perfect shot on Bitcoin. I think over the next couple of years, we're about 1 year from the next halving. We're bottoming out on the bear market, whether it's 12K Bitcoin or 20K Bitcoin or whatever it is. And I just think that there is room for a $3 to $5 trillion crypto market cap in the next 5 years. So what are your thoughts?
I agree.
Let's say it's the day. It's D-Day. It's D-Day. The stablecoins have depegged.
Yeah.
Stocks are down. Real estate's on sale. What do you do?
I completely agree with you, Brian. That's why I said I want to have my money outside of crypto on that day so I can go all in on that day. So look, I guess I'll use a more extreme example. Say, for example, if you're a fan of say, Matic, or if you're a fan of Quant, and you're like, I don't want to buy Quant when it's like at $150. I don't want to buy Matic above $1. I want to buy Matic when it's back at 40 cents again. I want to buy Quant when it's back at $40 again. And in a crash scenario like that, during that week, it is possible we could see Quant make a new low below $40. We could see Matic make a new low below 40 cents. And what if you're a fan of, say, CFX, right? This, what they call the Chinese Matic or the Chinese Ethereum. It went to like 1.8 cents or something like that during the low 3 months ago. In a mega crash, that CFX could go to half a cent or less. It is entirely possible. On a day like that, you might say, look, I want to put $5,000 of my money. I'm a student, and all I have is $10,000, but $5,000 into Matic, $2,000 into Quant, and $3,000 into CFX. That's going to be my portfolio. It could be something crazy like that on a crash, on a day where that kind of crash happens. And if that's the case, what I would do personally is, like I've said all along, I would buy houses if housing crashes. I don't think U.S. houses will crash as much because U.S. housing is kind of healthy this time because they're defending against what happened in 2009 because it's fresh in people's memories. So I don't think U.S. houses will crash this time. I think it'll go down a bit more, but not like a 2009 style crash. The situation isn't like that. But in other countries, if you live, I don't know, like I haven't looked into the Canadian or the New Zealand situation, but if you say you live in Canada or New Zealand or UK or Australia, it is possible housing prices in those places go down another 10-15%. I'm not an expert. I haven't looked into those areas. I can't guarantee that. But I'm saying it's possible, more than the US. On a day like that, I would buy some houses. I would buy really quality stocks if they tank 40%. I would buy some crypto as well. In terms of who will bounce the most, well, no doubt it's going to be the shittiest coins are going to bounce the most. But you're not going to invest that way. There is no doubt, like if you pick some coin right now that is like 100, ranked 130th, 400th, 1000th on coin market cap. Like CFX was ranked 800th or something on coin market cap before this bounce. If you can pick a little forgotten coin like CFX or AGIX, the AI coin, during a mega crash like that, and you know that the Fed is going to pump money and print money again. You know when that bull market is going to come again because the Fed's going to print again. And when that bull market comes, yes, Bitcoin will go from, say, 12K, 15K, wherever the bottom is, to, say, 80K, 65K, whatever the top is for the next bull cycle, 100K, whatever it is. But that AGIX, that CFX, that coin is going to go from half a cent to like $3, or that would be a 600x move. But unless you're a student, unless you're like a uni student who's like, I've got $5,000, I'm going to blow it on some coin that's either going to zero or it's going to go up 300x or 1,000x because I can move back with my parents. Unless you're a university student, college student who can do that, it's kind of pointless to talk about what we're going to do because you've got houses, I've got houses. You've got a stock portfolio. I've got a stock portfolio. Both of us are kind of like retired guys. We don't need to invest degen style, but some guys would want to do that. Like, what about picking up a coin like, I don't know, like Link, or what would be a good example? Not Matic or Quant, something that's kind of in between. What if, okay, Render, yeah, there you go, Render, RNDR, like it's got really legit team behind it. I'm not associated with them in any way. I'm just trying to give you guys an example. Its market cap is about $2 billion. What if it crashes like to 1/10 of where it is right now? A coin like that, seems like a coin that's, backed by a real serious team. What are you gonna do on that kind of a day? You wish you weren't holding it in Bitcoin. You wish you were holding it in gold or in I don't know, in cash, in somewhere spread between 3 or 4 different bank accounts. And on that day, you wish you could withdraw and transfer and buy into some stable coin. Even when stablecoin has depegged, you get even a bigger discount when you buy it in stablecoin, and then you go all in on if you're a college student, if you're a young guy, you go all in on some coin that you really believe. Like you pick 3 coins. I don't know, like just a hypothetical. Some guys might go Doge, Mask, Render. I'm not saying that's what I'll do, but some guys might do that. And you do that on a day like this, you wish you had your money in cash or in gold. That's all I'm saying. For the long term, if you're a rich guy who's got $3 million in a bank account, $30 million in a bank account, it's burning a hole in your pocket because you can't sleep. You're like, what if the bank goes down? I'm going to need to put it into like 80 different bank accounts to make sure I'm insured. Then yes, putting it partly into gold, partly into Bitcoin might help. But I think 95% of the audience who are listening to us today, I would say 98, 99% who are listening to us today are less worried about that problem and more worried about, are not in your boat, Brian. They're more like the average folk who are saying, Pablo, when is going to be this big crash that this 12K Bitcoin you promised that we're even lower than 12K Bitcoin, where Matic and Quant, everything goes super cheap, and you're going to come in and tell us this is the time to go all in, guys, and we're going to buy, take out our savings or whatever and plunk it into this coin, that coin, or buy a house or buy really quality stocks like Microsoft. It's basically winning the ChatGPT war. If Microsoft crashes like 70%, why wouldn't I buy Microsoft? Like that kind of mentality. That's what most people have. Back to you, Brian.
Yeah. So in 2008, the mistake that I made was thinking that everything was going to go lower. So this is probably a personal bias that I have, not wanting to be left behind this time. In 2008, I was like in my early 20s, and my mother-in-law, who's a really smart woman, said, "You really need to be investing. You really need to be buying stocks." And I was like, "No, it's going to crash worse. It's the end of the world. No, it's going to go lower." So I think, again, to play devil's advocate, because it's fun to debate, I do think that I personally would want to be careful not to miss the bottom. And last time Bitcoin was in a bottom, it still seemed too high. I remember I bought Bitcoin in 2017, and I remember when it went back down to 3-4K, like when the COVID crisis happened, and I was like, it just still seemed too high, and I didn't load. I mean, imagine loading up the truck on Bitcoin at 3 or 4K. Why didn't we do it? Why didn't we load up at 3 or 4K? So even though 28K Bitcoin right now, and I do think there will be a significant pullback, of course, at some point in the next few weeks or months. Let's just say 23K Bitcoin. It is that seems so expensive, and it's like, oh, we got to see 12K. It's got to be coming. Then I could buy a couple whole Bitcoin, or if I'm a college student like you're saying, Pablo, maybe I could save up and buy one whole Bitcoin. That would be so great. But are we really going to see 12K Bitcoin? And I guess this is where DCA, dollar cost averaging, is really a handy tool, because right now all of the on-chain metrics, and I know a lot of people think on-chain metrics are nonsense, but all of the on-chain metrics are screaming that we are at a macro Bitcoin bottom. And so I guess if I was a college student who only had a little bit of money, I would try to play it both ways. I would definitely want liquidity and cash on the side for the big crash. And by the way, if you guys haven't joined Pablo's Discord, you really need to join his Discord, because his predictions are wildly accurate. I've been following Pablo's predictions for 2.5 years now, and he's the one to follow for predictions. That I mean, it's really, really uncanny how accurate his predictions are. So I would want some liquidity for Pablo's predictions of there might be a bigger crash, there might be a big recession coming, but I would also want a little bit now so that I can sleep at night. Now, with that being said, you're absolutely right about the altcoins. I mean, altcoins will just get obliterated if there is a big crash. You know, people might hold on to their Ethereum, people might hold on to their Bitcoin, but a lot of these cryptos, I mean, Matic, if there's a big recession, a big severe recession, nobody's even going to remember what Matic is. I mean, it's going to go down, it's going to fall, it's going to flatline, and it's just going to sit there. And people are going to be like, Matic, what was that? Oh yeah, that was. And then if it does come back to life in the next bull run, it's going to rocket back to life, right? So I totally agree. You need to have money for these altcoins. Some of these altcoins might get ridiculously low as Bitcoin dominance just skyrockets. And I think that's where we're in this. I read your Discord today, Pablo, that we're sort of in this ambiguous environment where there's some signals telling us one thing and some signals telling us another thing, and it's sort of hard to, it's not clear. The waters are murky, right? I mean, would you agree with that the macro signals are kind of murky right now?
I mean, have you seen Chairman Powell's speech today? It seems it's so muddy that he doesn't even know what to say. It's muddy because on the one hand you still do have inflation. It's true, it's still at 6%. It's really, really unacceptable for a first world country like the US. Yet on the other hand, you're so close to a financial crisis. Not like a major one like Lehman just yet, but maybe I think something's got the Fed spooked, and that's why they're coming out saying we'll guarantee. They're flip-flopping. It's one of those. The way I describe it in my Discord is imagine if you're like in a circus act. You're walking a high wire act. Like imagine, just to make it more exciting, on the right hand side, if you're walking on this high wire act, and if you fall to the right hand side, you land in a tub of searing hot lava. If you land in on the left hand side, it's gonna be you land on a giant ice rink, and you break all your bones, and you basically, it's gonna be cold as hell as well. Either side is terrible to fall in. So best advice is don't fall either way. And the Fed is walking this tightrope. If it just falls one way, it could land in searing hot lava of inflation, like hyperinflation, like 15% and above type of inflation, because it might need to print money to save the banks. It's possible. And if it falls slightly the other way, it could land on that ice rink of deflation or depression. Not even like a recession. I'm saying depression. It's still on the cards. It's still possible because like the Fed has to think about how crazy the situation is. The Fed has to keep on hiking. It might hike again in May. I think their next meeting is in May, and hold it there. Whilst the banks are screaming, the reason why we're crashing right now, why the banks are crashing, another 186 banks are ready to crash, ready to go right now, because you've hiked the rates so fast, so quickly that people are they're not in a panic. It's not a bank run. They're taking their money to park it in US Treasury bonds, which you're paying the yield on of 5.25% right now for 3 months, 6 months, whatever it is. And yet we're holding long-term Treasury bonds, which you killed by hiking so fast. So therefore, the prices have tanked because yields have jumped up. And the reason why these banks, I should have said this from the start. Brian, you know this. The reason why Silicon Valley Bank is in this hot water of trouble is because of the Fed. Silicon Valley Bank didn't have so much deposits to deal with. It only had $70 billion of customer deposits. And then what happened in 2020? Because of COVID, because of the COVID crash, because of Fed said unlimited printing of money, suddenly everyone's flush with cash, flush with money. All of its customers came in and deposited all that money into Silicon Valley Bank. Suddenly, their deposits expanded from $70 billion to $200 billion, almost a 3x in a matter of 6 to 7 months. that is caused by the Fed. That is 100% caused by the Fed. And that's like saying to your kid who only gets, like $15 a week, suddenly you give him $50 a week and say, hey, go spend it somewhere. He has no idea how to spend that on what. He might, then he might buy a few things that you don't like. So, and then the Fed goes ahead and hikes like crazy. So, and then causes this bank run situation that I've been talking about. And, and yet you've got, when this is happening, when major banks as big as Lehman Brothers are actually failing. I'm not saying Silicon Valley Bank or First Republic Bank is as big as Lehman Brothers, but guess what, guys? Credit Suisse is as big as Lehman Brothers. Credit Suisse is the 5th largest investment bank in the world. 5th largest, right? Lehman was the 4th largest. So we've just had a collapse on the scale of Lehman. The only fortunate thing about that is that Credit Suisse is a Swiss bank, and it happened in Europe, didn't happen in America. That's the only fucking difference, right? So the Fed is kind of shrugging and saying, more problems for Europeans, not our problem, right? Hyperinflation and energy crisis. They're running out of gas in Germany, in Europe. Not our problem. We'll keep on hiking. This has kind of been the Fed playbook all this time. This is a little bit like a conspiracy theory, but I believe this conspiracy theory has a lot of merits. Have you noticed, Brian, that every time the Fed hikes rates, something breaks? And usually, more often than not, it's something outside of the US that breaks. So famously, we had the Latin, what do they call it's called the Latin debt crisis in the 70s, where if you're Italian, if you're Argentinian or Brazilian, you remember this. Your currency went into hyperinflation. Your country basically went bankrupt and had to borrow a lot of money from the IMF. That happened in the late 70s, early 80s. Then the Fed hiked again and caused the Asian financial crisis of 97. And if you're Asian, you remember this. That's when the Thai ringgit, the Thai baht, Malaysian ringgit, Singaporean dollar, Hong Kong dollar got defended by the CPC. That's the only one that didn't crash. Korean won, Japanese yen, everything crashed. Japan did okay out of it, but everyone else crashed except China and Hong Kong. If you look at all the Korean banks, if you look at all the Korean big companies like Samsung, they're basically majority owned by foreign international stockholders, and the reason why is because they all went bankrupt. They all crashed during the 1997 Asian financial crisis. That was also because of Fed hiking. And then you have the 2010 pigs crash. I didn't come up with the term, so if you get offended, it's not my fault. PIGS, which stands for Portugal, Italy, Greece, and Spain. Those 4 countries had their debt and they were going to have a currency crash as well, except they're part of the euro, so their currency didn't really crash. But they had a debt crash where every country got bailed out. Every one of those 4 or 5 countries basically had major debt problems. So every time the US hikes like this, basically something breaks around the world. Sometimes it breaks internally, like the what's it called, the .com bubble. Essentially, whilst these banks on the scale of Lehman Brothers are actually crashing, whilst another 186 banks are waiting to crash, and we've just had Janet Yellen, the U.S. Treasurer, literally 6 hours ago, came out and literally she said, we're not going to unilaterally back all the deposits, all the insured deposits. So I guess that's another flip-flop from her, saying that now we're actually not going to back all the deposits if these other 186 banks go down. That's why you had a bit of a meltdown in that, had a bit of a, the stocks tanking. In a situation like that, yet the Fed is still saying inflation is 6%, and they're right, it is, and they still need to keep hiking. And yes, they're probably doing the right thing by keep on hiking. It's a crazy situation, I'm not sure where this is going to land, but I'm hugely betting against a soft landing. I've said in my Discord before, and I've said it in on Twitter as well, so I have it on record. I think there's 10% chance that it's going to be a soft landing. 40% chance we're going to get some sort of recession. That includes like maybe a soft recession, but still recession, which means the U.S. economy just goes backwards and probably unemployment goes up as well. And a 50% chance of recession, and 40% chance of something worse than recession. What's something worse than a recession? That's either a depression, a mild, not like a full-blown Great Depression type of thing, but a mild depression, so it's like a severe recession, or a bad stagflation. Stagflation is when you have inflation and recession at the same time. So you could have like GDP growing at minus 0.5%, minus 1% for 2 or 3 quarters in a row. You could have unemployment at say 5 to 5.5%, and at the same time, inflation does not come down. Inflation still stays at say 4.5%, which is way above the Fed's 2% target. That would be terrible. That only happened in like the 70s for a few years. It's the worst nightmare for any economy, for any central bank. So that's what I'm saying. 10% chance of soft landing, 40% chance for recession, 50% chance of recession, 40% chance something worse than recession, and I think that's still quite possibly on the cards. This might be. I do agree with you. Last thing I'll say is this: in terms of Bitcoin and crypto, I do agree with you, Brian, that all the on-chain metrics, all the on-chain indicators look like a big bottom has formed on Bitcoin. It is possible that 15.4K was the bottom if there is no recession. If there's no recession, then the Fed just slowly hikes and then they kill inflation. Inflation goes down to like sub 3%. Fed's like, will throw in the towel and say, it's close enough to 2%. Now the economy's weak. Now jobs are, unemployment's bad. We're going to start, lowering rates now and let the economy recover. And if they did that, then basically, you could get a soft landing scenario where Bitcoin just keeps on going up. That is probably like that's a low probability scenario in my mind. So that's why in my Discord and on Twitter, if you look at a lot of my tweets, I call what we're in right now a big bounce / small bull. I'm not sure what you would call it. I'm not calling it a full-on bull market. I'm not calling it one of those go all-in situations. I'm saying it's a small, at best it's a small bull market at best, or at worst it's a big bounce. As in, it's still a bear market, but it's a big bounce, like to 30K, 34K, 40K, 50K. 50K you probably call, above 40K you might call that a small bull market. If it gets to 30K, 32K and turns down, 34K and turns down, you might call that a big bounce in a bear market. I don't care what you call it. The probability of this being the bottom and we're now starting a full big run now, in my mind, isn't that high. Seeing what is happening in the world right now, but I guess like you said, no one can be 100% sure. So we play it both ways, and in my videos, in my Discord, we've been playing this big bounce. We've been buying stuff. We've been buying alts. We've been buying some Bitcoin. We've benefited from this big bounce. But however, keeping in the back of our mind that this recession, just because it's been delayed, doesn't mean it's not coming. It's still entirely possible that it could still come.
Yeah, so I think stagflation, there's a pretty good chance that we will see at least some level of stagflation. I mean, heck, we're already seeing it to some degree on a very small level, because since the Fed's hand was forced to be a little bit more dovish than they wanted to, we are going to have inflation. It's not going to go away tomorrow. And, with the banking crisis and things breaking now, we're also going to have somewhat of a recession. I want to point out one interesting thing before we move on to our next topic for tonight. But, one thing I think people have a hard time wrapping their minds around is the limited supply of Bitcoin. And I know that people are going to be like, oh, we're talking about the limited supply. It's so boring. I've heard this a million times. But what you might not know is that most of the other assets that we talk about, whether it's houses, stocks, they're making more of them, right? They're always building new homes. There's a home development about a half an hour from you. They're building like 3,000 new homes. Stocks are always getting diluted and shares are always being added. And there's, stock splits, which don't affect the market cap, but they make the price seem to go down. Bitcoin has none of that, you guys. So it really, I think there's going to be a lot of upward pressure on the price of Bitcoin. Now, the thing that I'm not going to tell you is if the bottom is in. I think Pablo is a more of an expert on looking at that and looking at the charts and looking at all the macro stuff. But I do think there's going to be some serious upward pressure on Bitcoin soon, whether that's this month or in a year from now. I don't know. I do think it's going to happen soon. So the last part of the show for you guys tonight is we are going to talk about a very promising crypto project that's actually launching on exchanges almost as we speak. I believe it's launching on MEXC exchange in a couple of hours from now. And that's actually the reason that we need this Twitter space, Donald Trump getting arrested.
Oh, yeah.
If you look at all of the social media platforms right now, there's this huge upheaval in social media, right? I mean, you're right. You got Elon buying Twitter, which, there's pros and cons. I think there's a lot of good about it. You got Donald Trump having his own social media platform, Truth Social. There's a lot of rumors now that Trump might actually abandon his platform, right? So it's like, where can you go? What social media platform can you get on?
TikTok.
TikTok might get banned, right?
Oh my God.
So it's this huge, massive chaos with social media platforms. So we're going to talk a little bit tonight about the sponsor of the show. It is a sponsored segment, just to be clear. RealStar, and they are a social media app that's a decentralized social media app that is launching right now, that Pablo and I have gotten to know pretty well over the last few months. In fact, one of our friends actually went and visited them at their office, so we've gotten to know these guys really well. They're a real company. They just had their launch party in Dubai, and Pablo was just in Dubai also. One of these times I want Pablo to tell us all about Dubai, because of course we're all intrigued about these crypto-friendly nations. But they're a decentralized social media app. They just had their launch party, and right now they're in, I believe it's in Paris at another crypto conference. So these guys are really moving and shaking, and their vision is to be a decentralized, sort of an all-in-one app, all-in-one social media app. And me and Pablo already have our accounts set up on their platform, on RealStar. Their app is already working great. You can upload videos, you can like videos, you can comment. And I just think this is such an important time right now to be talking about decentralized social media, because there's all this upheaval in decentralized social media. So if you guys want to check it out, it's Real, REEL, RealStar, ReelStar. And I've retweeted some of their recent tweets, so you can go on my account and look at what they're doing. But what do you think, Pablo, about the idea of just decentralized social media in general, and like a WeChat? What's the story with WeChat? I mean, I know you've told me about it before.
Okay, so basically, WeChat is this super app they have in China, and basically, it's Elon Musk has been saying that he wants to copy it for Twitter, because so I guess he's conceptual thinking enough to realize that it could happen. But WeChat is basically this app, one of like many apps created by Tencent, which is listed in the US, and the stock's doing well. It's like imagine it's a chatting app. Imagine like you have something like WhatsApp. You go on WhatsApp, you can chat to all your buddies, but then you press another little button, takes you to another section where everyone can post on a timeline and saying, oh, I just had lunch today. Oh, I just went for a swim today. Here's a video of me swimming. Here's a picture of my lunch. Here's my daughter at her ballet class. And it's like your Facebook timeline. and then you press another button and you go into another section, and people are posting like videos they've created, like kind of like TikTok. It's what they call a super app or a mega app, and basically that's what Elon wants to copy. And one thing about it that is different is basically when you talk to someone on Instagram or on what's it called on WhatsApp, you can actually send them money. I mean, I heard Instagram is trying to install a Instagram wallet so you can send USDT, USDCs. But in China, what they could actually do is actually say, like, if you're chatting to someone on Instagram or on Telegram, or on WhatsApp, you could actually just send money to the other person. You could actually just basically forward them, like, send them like 100 yuan, 300 yuan, whatever. It'll be actual cash that hits their account that goes into your bank account, because your bank account is linked to your chat app. So I guess Elon's thinking that, well, we've got the Twitter part figured out. We've got the big sort of town square social app, media app aspect of it figured out, and people can message, DM each other. We just need to apply for a financial license, which they are doing right now. And when they get that financial license, they're going to allow you, hopefully, to be able to send each other money in DMs. Not stable coins, but actual money, US dollars, European euros, in the DMs, when you DM each other. And on top of that, the way it's interesting because it actually has helped two crypto to kind of take off. One is Doge and one is Mask. So everyone's speculating that he might use Doge on the platform to transfer to use as payments, and apparently you need to use the technology created by Mask, M-A-S-K, to do this payment transfer on Twitter. But of course, they're not going to be the only one who's going to try this. I think other platforms will try this as well, especially if it's a success. Realstar probably would be thinking about something like that as well. Like if you go on the Realstar app, they actually have a NFT display section where you click in there and you can see what NFTs this creator is holding. So I think it's probably more pure, what Realstar is doing, because they're not saying, oh, we're Twitter, but now we're trying also to copy the Chinese super app called WeChat. They're basically just launching like a month or so ago their prototype, and they're saying, okay, we're building it from the ground up, so it can be anything we want. That's the way I see it.
Yeah, I think that's a really good point, that Realstar is built around the crypto ecosystem, which all of us know sort of has this ethos of freedom of speech and decentralization and, not trusting. And I don't mean to sound like a conspiracy theorist, but we're seeing banks collapse all around us right now, so it's not so much a conspiracy. But Realstar is built around, crypto decentralization, owning your own content, owning NFTs, being able to license NFTs, creators being able to monetize better. And you guys, I really do think there's going to be a flock of people who go to these other apps and try out these other apps. I mean, there's so much. Mark Zuckerberg thinks that if he can take down TikTok with a bunch of lobbyists, that everybody's just going to re-log into their Facebook account and be like, I'm so happy to be back on Meta. This is just what I've been waiting for. Let's go, Mark Zuckerberg. But that's not going to happen. We're going to go forward to the next app. We're not going to go backward to Facebook.
Some people hate Meta right now. Like, the people have figured out, and I've seen 2 videos that's gone viral about this. They've said, that's their opinion, right? I'm not saying they're right or wrong. They're saying the reason why TikTok is getting shut down is not because of data privacy, because all the data is with Oracle. It never leaves the United States. Like the CEO is American as well. So what this is really about is because Facebook, Google, Instagram, Snapchat, all these companies just can't compete anymore. They've lost so much money, so they banded together, got some lobbyists to Congress, and figure out, oh, what's the best way we could attack TikTok? Oh, it's a Chinese owner. So as soon as they did that, as soon as Congress starts voting on banning TikTok, then have you noticed on Instagram and on Facebook they took down the creators fund. Before, I mean, I never use it, but other creators tell me before, apparently if you could be in part of the creators fund and you get paid if you make a video and the video goes viral or whatever. But now they've fully stopped that fund in the last week or so, as soon as it seems like TikTok could get banned. So I've seen 2 videos now talking about this that's gone viral, and the amount of intense dislike those creators have for those other platforms that are trying to take down TikTok and then try to basically not pay creators because then they don't have competition, is so much that I think people genuinely want an alternative to then keep on going. Hey, Facebook, that's the it's so I don't know what's the word. It's so frustrating, I guess.
Yeah, it's